Alex Karp, the founder of Palantir, sure knows how to get his investors excited. On the most recent call, he talked about how this is still only the beginning. A juggernaut is emerging. This is the software century, and we intend to take the entire market. The world is in the midst of a US-driven AI revolution that is reshaping industries and economies, and we are at the center of it. Perhaps a touch of hyperbole here, but there is a lot of truth in terms of the AI revolution and how Palantir, PLTR stock, is trying to leverage this revolution to enable companies to deliver services in a better, faster, cheaper, all around acceleration and revolution. So there's a lot of excitement going on with Palantir. In this video, we're going to talk about their latest results, what Alex Karp and Palantir, what they're up to, my thoughts on the valuation, because the stock clearly has done quite well, and where can Palantir go in the years ahead. My quick jump to the conclusion takeaway is that a lot of investors have chased Palantir at this point, and I think you are better served to be cautious versus looking to chase. I would not advise that you chase. Let's dive right into understanding what's going on with Palantir. My name is Daniel. You're watching Unrivaled Investing. Looking at Palantir, yes, this is what makes investors go bananas, is they see revenue accelerate from 13% growth to 17% growth, all the way up to 30% growth in the most recent quarter. Investors, generally, when you're seeing a business, a sizable business, Palantir's $150 billion market cap right now, generally you don't see acceleration in revenue growth. Usually you see like, hey, this is the growth, it's 30% this year, then it's 25%, and then it slows down. To see that sort of acceleration going from 13 to 30% means there's something new going on with the business that's reinvigorating their growth. There's something special here. What's special, as you sort of peel back the layers, is their commercial business is just going bananas, driven by the AI platform revolution. You see 54% commercial revenue growth, 77% growth in the number of customers. And so just all around, the AI revolution is not only in their historical government business, but now it's really impacting U.S. commercial businesses, U.S. enterprises. And you can see it across a lot of different customer referrals and quotes talking about how it's being implemented and it's saving time, it's saving tens of millions of dollars. You know, one example, they talk about how the AI platform has helped reduce the length of stay in the hospital by 15% for patients with sepsis. That's a big deal because you're talking about the cost not only to the hospital, but also to the patients that are being hospitalized. So this is talking about overall a huge improvement. Leveraging AI. This is a big deal. And this translates into a huge acceleration in revenue growth. When customers and businesses can say, wow, this is a big deal. We can leverage our data, leverage a second pair of eyes that scans all of it using AI to come to these conclusions, come to, better products, better services, better processes. And so what was an initial boot camp for a bottled water manufacturer or an agricultural software provider where they see Palantir's AI solutions, less than a couple months later, you're talking about 50 days later, this company's signing a 7-figure deal. For this agricultural software provider, less than 2 months later, signing a 7-figure deal. This is what's driving the acceleration in the business, is this AI revolution where businesses are saying, we need this to operate. This is critical. And keep in mind, this is not just U.S. commercial businesses. The U.S. government is still a bigger piece of their revenue. That said, over time, it wouldn't surprise me if commercial becomes the lion's share, but this is still a key part of their business, and they're still winning contracts for their AI machine learning solutions across the U.S. military, Western alliances as well. This growth is translating into improved profitability. You can see how their operating income has gone from around 40 million just a few quarters ago to over 100 million. This is what investors like to see. Top this off with getting admitted to the S&P 500. So now you start having the index inclusion. You have forced buyers that if you buy the ETF, passive flows, you're going to be buying Palantir stock as well. Since then, you also have one of the board members of Palantir, and this tweet was subsequently deleted. I think he even deleted his whole profile. Maybe he was so ashamed about it. He tweeted, "We are moving Palantir to NASDAQ because it will force billions in ETF buying and deliver tendies to our retail investors." I think he's talking about profits by tendies. Player haters. He should have at least said like player haters. Player haters, be aware that we've been hated for decades, plural. Everything we do is to reward and support our retail diamond hands following So the retailers, that's who we're really trying to reward. It's not himself, who just sold $800,000 worth. It's certainly not Alex Karp, who just this past month sold $1 billion worth of Palantir stock. Those aren't the people that are getting the rewards. It's not Peter Thiel selling, over $1 billion, in the last couple of months. These aren't the people getting the rewards. We're doing it for Diamond Hands, baby. Diamond Hands. That's who we're doing it for. Looking at the stock price this past year, up around 200%, over 200%. And so I think it is important to reflect, where does Palantir stock go from here? I think it's important to, bring some reality to this conversation. Gravity still applies. And as always, this is not financial advice. Also, last week, Matthew, a premium member of the Unrivaled Investing community, shared the following: Netflix, Spotify, and Unrivaled are the only subscriptions I'll never cancel. An incredible value. That's a direct quote. Richard also last week commented, he said, one of my best investments when I started the subscription. He's talking about Unrivaled Investing. By the way, the prices for Unrivaled Investing are going up at the end of this month. So now is the time to lock in the favorable rates. Looking at Palantir, you're having a stock that now trades back effectively where it was trading prior, at the peak of the valuations, prior bubble peak, around 50 times sales. You can see it's trading north of 50 times sales currently. That is incredible. That is a lot of hopium, a lot of excitement that investors are giving Palantir at this point. Some of it's justified. Some of it's, investors looking at, the growth, how they're talking U.S. commercial revenue is, expecting 50% growth rate, talking about $1 billion of adjusted free cash flow for 2024. So investors like to see this. The problem is that you're talking at $61 a share, around $150 billion market cap. So you're talking 150 times free cash flow. Now you might say, okay, there's a lot more growth coming. Maybe margins will improve a lot in the years ahead. The challenge is that even that growth rate, 30% growth. Everyone's, it's accelerated from 13% to 30%. I mean, maybe it'll be 35%. Hold your horses. Hold your horses for a second, because it's important to actually look at what's going on here. I think there's a lot of hopium and excitement. You need to fact check yourself. Check yourself before you wreck yourself. Maybe one of the board of directors would tweet something like that, because sales growth, if you factor in the share count, and you can see this at AI Ticker Chat, this is the diluted share count, year over year. It's still growing at a pretty sizable clip, and they've talked about how this will moderate over time. The most recent quarter is just shy of 6% year-over-year growth. You need to factor in that share count growth, because when you do, sales growth drops from 30% to 23% when you consider that. So not quite as enticing. Still, I think there's a lot of promise, a lot of excitement that investors should be mindful of. But let's factor in this reality. Let's assume 25 to 30% growth in the years ahead, and that's on a per share basis. That's faster than where they're currently growing closer to 23%. Let's say 25 to 30%, 30% being sort of the upside. Let's assume 25 to 35% profit margins in the years ahead. They're not there yet. They're at closer to 15%. So more than doubling of their profit margins. Let's just look at the high scenario. Let's just look at this bull scenario. Let's assume 30%. So significantly faster than where they currently are. Let's assume margins more than double where they currently are. And let's assume a 40 times earnings multiple 5 years from now. In that case, you're underwater. You've lost money by roughly 15% over the next 5 years. This is a hypothetical valuation framework. Stock prices go way higher, way lower. It depends on sentiment. It depends on exogenous factors. It depends on, what Wall Street, what's the sentiment? What do investors, what type of multiples do they want to assign? Also the execution of the business. Does management deliver? I look at this and think, wow, in this high scenario, you're still underwater over the next 5 years. If you get anything more conservative, which by the way, they're not near this low scenario right now. They're at 15% versus 25, and they're at 23% versus 25. So, I'd say they need to get better in order to justify this low scenario. And this low scenario gets to more than 50% loss. So I think it's super important for investors to be mindful that long-term, 3 things drive your returns. It's the fundamentals of the business. That's number 1. Number 2, it's the cash flow that can get returned to you as a shareholder. They're generating around $1 billion a year in free cash flow. A lot of that stock-based compensation, let's say it all gets returned to you at a $150 billion market cap, even assume, it continues to sell off, you're still talking about less than 1% that can go to you. So then the third factor, so we talked about fundamentals, we talked about the cash flow that can go to you. Third factor is valuation. And I think investors have gotten ahead of themselves here. So I would not chase Palantir stock because I think valuation could be a significant hit, a significant headwind for shareholders over the next 5 years as they go, wait a second, I thought that screen said 50 times earnings. It's 50 times sales. Oh my goodness, that's bananas. Wouldn't surprise me if you have that sort of development over the next 5 years. Maybe not quite like that, but I think you get the picture. Frankly, there are just much better plays out there. There are much better plays where you can say, hey, here's a company growing at X%, even a comparable growth rate, just trading at a fraction of what you see with Palantir. So the better plays out there, and I hope this video has been helpful for you. If so, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for tuning into Unrivaled Investing.